We've all been brainwashed to believe that debt is bad. Specifically, we are trained to pay down our mortgage as quickly as possible, whether that be by taking out a 15-year mortgage with a lower interest rate than a 30-year mortgage, or taking out that 30-year mortgage and paying extra on the payments. Today, we're going to talk about why you should consider taking as long as possible to pay off your mortgage. Hi, I'm Olivia Kirk.
I'm Tim Urich. We're from Tier 1 Capital, and we're here to show you how to regain control of your money.
For the best advice on controlling your cash flow, be sure to subscribe to our channel and don't forget to hit that bell to be notified when we upload new videos twice every single week.
Stop. Before you put an extra penny on your mortgage, you need to ask yourself these 3 questions. Number 1, will putting extra money on your mortgage increase the value of your home? Number 2, is that money easy to get at? And number 3, if you put extra money on the mortgage, does that forgive you from having to make the next monthly payment? Check out our YouTube video where we do a deep dive on whether or not you should be putting extra money on your mortgage. We'll see you there.
When it comes to buying a house, it could feel like a huge commitment. Well, because it is. Think about paying something consecutively for 15 to 30 years. It's kind of a big deal. So it makes sense to take into consideration all of the factors when you're making this big decision. When it comes to banks, a lot of times their marketing tactics position things as if they're in our best interest, but in fact, they're actually in the bank's best interest. Let's take a look at a 15-year mortgage versus a 30-year mortgage. When you go to the bank, you'll notice, in almost all cases, that the interest rate on the 15-year mortgage is lower than that on the 30-year mortgage. Let's take a look at this from the bank's perspective. If I want you to do something that's in my best interest, what's the easiest way to do it? By making it look like it's in your best interest. That lower interest rate is bait. They're saying, hey, we're gonna get our money back as soon as possible, so we're gonna entice you to take that shorter term mortgage. Versus with a 30-year mortgage, they're gonna charge you a little bit more and give you the option to pay it back over a longer term. But think about it from the bank's perspective. They live and breathe off fractional reserve lending. So the sooner they get their money back, the sooner they're able to lend it out again and again and again and again and make even more return on their assets.
And you see, they take our eye off the ball by enticing us with lower interest rates for a shorter duration loan. And by doing that, they're now controlling more and more of our monthly cash flow. A 15-year mortgage has a higher monthly payment than a 30-year mortgage. Think about it. They made the same loan, right? Let's say you borrowed $150,000. Either way, the bank is on the hook for $150,000. But now they're getting their money back quicker. They're getting it back in half the time. And one of the other techniques they use is they show you how to add a little bit extra every month, and you'll knock 4 years or 8 years off the duration of the loan. Again, here's what's happening there. You're putting them in a much stronger position. And what do I mean by that? Well, it's real simple. The lower your mortgage, the easier it is for the bank to sell the property if you default on that mortgage. If you have a $200,000 home and a $150,000 mortgage, they've got to sell a $200,000 home for $150,000. But if they could get you to put an extra $20,000 or $30,000 on that loan, on that mortgage, now they could sell a $200,000 house for $120,000 instead of $150,000. And make no mistake, all the bank is concerned about is getting back what they have outstanding on that loan. They are not concerned about you getting any additional money.
Leave us a comment down below. Have you been making extra payments on your mortgage? And after listening to this, are you going to stop? Or do you still feel like it's the right decision for you? And this is where the brainwashing comes in. We're trained to believe that by paying off our mortgage as quickly as possible and having as little debt as possible on that mortgage, it's gonna put us in a better financial position because we won't have a mortgage payment. But let me question this. Doesn't it make more sense to have a reasonable, smaller monthly mortgage commitment and keep more of your hard-earned cash on the side liquid for you, where you don't have to ask permission to access it, so that in emergencies, because life happens, let's face it, you don't have to go to the bank and ask permission to access the home equity on your home again?
In addition to that, think of this. The longer you could take to pay back that mortgage, the less value your monthly payment has in buying power. In other words, the strongest dollar you have, the dollar that has the greatest amount of buying power, is a dollar you own and control today. If you take 30 years to pay back that mortgage, that monthly payment amount in 30 years has significantly less buying power. So you're paying the bank back with dollars that have less and less value. That is in your best interest.
Here's a practical example. Think about candy bars. Imagine if you could still buy a candy bar today for 75 cents.
And let's face it, when I was a kid, we would go down to the store and buy penny candy. What can you buy for a penny today?
I mean, do pennies even give you good luck these days? That's the impact of inflation and the impact it has on our dollar. Think about your mortgage payment in the sense of candy bars.
And here's some questions that you should really ask yourself when considering paying extra or taking a loan of a shorter duration. Does putting extra on your mortgage forgive you from making the next monthly payment? And the answer is no. Number two, is that money, that extra money you put on the mortgage, is that easy to get to? No, you've got to ask the bank for permission to borrow that money again. And number three, will putting extra on the mortgage increase the value of your home? And the answer again is no. So when you ask yourself these three questions, should you put that extra money on the mortgage? And the answer is no, then you know what to do. Or more importantly, you know what not to do. You want to be in control of that money, not the bank.
When you look at things through the lens of control, the answer often becomes much more clear. If you enjoyed this video, be sure to check out these two. We picked them out special for you.
Thanks so much for watching our video. And remember, it's not how much money you make.
It's how much money you keep that really matters. We'll see you in the next one.